Shortly, I'll be introducing these three gents who will be talking to you about their businesses. First of all, I just want to say thank you. We're obviously delighted to be here today and sponsor InsurTech London 2017. A little background on Cambridge Global Payments, which is who I work for. Cambridge was established in 1993 as a direct competitor to the banks to provide businesses with the ability to buy and sell currencies and facilitate international trade. Up until 2009, Cambridge was operating in a very crowded marketplace, very traditional FX brokers offering price-based improvements on spot and forward deals versus the bank and other providers. We had to differentiate ourselves. We made a decision that we needed to be future-ready, separate ourselves from what was and still is a huge pack. There was a lot of FX brokers registered in and around the city. And to do that, we had to embrace fintech and digitize our services. The transition process was a challenging period. It required significant investment in technology, recruitment, branding, and PR. However, standing here today, I'm very proud to say that the volume of payments as a result of the technology that we've developed has risen from 20,000 a year in 2012 to just shy of 120,000 a year now. So in a very short period, we've increased significantly. That number is expected to grow exponentially in the next 12 months or so and beyond. Whilst we're considered to be at the leading edge of mass payment technology, we of course still offer and maintain a full product suite of traditional FX hedging tools that allow us to deliver frictionless payment solutions to companies across almost any industry. Now, if you're interested in hearing a little more about the Cambridge story and about how we can help your business to streamline its processes, we'll be speaking in the Mayor's Parlour at 1 p.m. I have some colleagues with me today who have some information for you, talk about the Cambridge story, about how we went from traditional broker to fintech effectively, and what it's done for us as a business, and what it could do for you too. The speech itself will focus around how payment technology can dovetail into the premium collection and claims process, reduce error rates, economize overheads, and save you valuable time. There are still many places available, so we'd love to see some more of you there. You're more than welcome. It's at 1 p.m., as I said, in the Mayor's Pitching Parlour. For now, though, I'm very pleased to have the opportunity to introduce you to three people who are exceptionally well placed as thought leaders to help you if you're thinking of making a similar transition to us. Eric Mignot is the president and founder of Plus Simple, an insurtech that offers flexible paperless insurance to household via mobile application. Tom Britton, just sitting here next to him, CTO and co-founder of the Syndicate Room, which is a leading crowd-funded investment platform who can help you raise funds for your transition. And last but certainly by no means least, David Haggie of Haggie Partners, who are market leaders in offering full-service PR and marketing services to the corporate world, helping you to achieve the all-important outward message and demonstrate your change. Gents?
Good morning. My name is Eric Mignot. As you can tell from my accent, I'm French. And I'm here to introduce you to Plus Simple. Plus Simple, we have a big ambition, which is to become the leading financial service platform for sole traders, freelancers, and SMEs across Europe. But let me start my story by sharing something very personal with you. I have had the same hairdresser and the same physiotherapist for the past 15 years. Those two guys, John and Jack, are very, very good professionals, and everybody loves them. They have no problem whatsoever with their professional life, except one. And guess what? That problem is every time they need to interact with either their bank or their insurers, they get very, very nervous. How do I know it? Easy, because I was a banker and then an insurer, and they came to me every time they needed to interact with bankers and insurers because they didn't understand the thing and they were really stressed by their relationship with their banker and insurer. And so this is why we decided to create Plus Simple, So the first thing we decided to tackle is professional insurances. And to revisit and simplify professional insurances, we had to rethink from scratch the customer experience of those professionals. And today, this is what their customer experience is, which is basically, if you want to cover all your risks, be it your health, your property, your professional indemnity, protection, etc., you need to answer around 200 to 300 questions. Then you need to sign between 5 to 10 policies. And then you get 1,000 pages of paper. So no wonder that people who are not specialists just can't understand what is going on with their insurance. So we decided to do the same thing with only 10 questions, only one policy, and everything done online, signing online, paying online, and with 0 paper. How do we do it? So we have 3 main components that we have developed at PlusSimple. The first one is that we have created from scratch a robot broker, which is basically doing what a human broker is doing. That is first analyzing the need of the client, second preparing a bespoke solution for the client, then finding the right market for the client, and then implementing the policy and managing the life of the policy and managing the claims. How were we able to do that? Basically getting binders, delegated authorities from big insurers that allow us to revisit completely the customer journey through our robot. The second pillar of our development was to rethink from scratch the user experience. And what is happening there, our insight is that what is happening with insurance is what happened 15 years ago in the computer industry, or maybe 50 years ago in the car industry, which is basically that when you go and try to buy insurance, you need to be a specialist. You need to know what are the name of the products that you're requiring. You need to know what level of guarantee you want, etc., etc. And this is 15 years ago when you wanted to buy a computer. Maybe you wanted to do just office work, and you had to answer questions like, what is the size of the memory you need? What is the speed of the processor that you need? And this is what is happening with insurance. It's product-based, it's not need-based. So we basically recreated a journey that is needs-based and not product-based. And the third pillar of PlusSimple is about distribution. We perfectly know that access to market is really complicated and acquisition costs are very high. So basically, we design a B2B2B approach, and I'm going to elaborate a bit more on that later. So here are some screens. Basically, what our robot is doing is just asking you what is the name of your company. Okay, based on the name of your company, we have all the names of the companies in France with all their characteristics. So our robot start processing the information, the public information, and then asking some bespoke questions in order to prepare a bespoke solution that would cover all your needs. Again, be it professional indemnity, property, health, etc., etc. And then we give you 3 choices between the most economical solution, that is, I just want to have the minimum required covers, or an all-risk solution, and an intermediate solution. And you basically choose what you want, you sign online, you pay online, and you're immediately insured. And we do it both on desktop and with native applications that we have developed. And the result is that the testimonials gives us a 4.6 out of 5 rating from our clients, which is way above what traditional insurers are experiencing. So in terms of go-to-market, let me share another insight. Insurers are not dumb. And I was an insurer, as I will tell you, and I saw a lot of smart people in insurance. The thing is that there is a lot of inertia with technology and a lot of inertia in their organization. And so what we decided to do is tell them, okay, what basically you're lacking is a technology platform that allow you to be efficient with your smaller clients, okay, your smallest clients. So we basically went to see all the big brokers, all the big insurers, and all the big corporate partners that had access to our target customers, which is basically the freelancers and the very small clients. And we told them, okay, let's partner together and let's co-develop those segments together. So we basically convinced 5 out of the 10 biggest brokers in France, like the Willis Marsh of this world. We also convinced one of the biggest retail bank in France and some of the big insurers to co-develop with them a specific segment. So for instance, with Marsh, we are developing medical risks. With Willis, we are developing travel agencies, etc., etc. And basically, by doing that, it gave us access to 1 million potential customers for which we are sharing revenues with our partners with zero acquisition cost. Zero acquisition cost. How did we manage to convince those partners to work with us? We are experienced professionals. I was the managing director of Hiscox insurance company in France. And before that, I was the managing director of Boursorama, which became the largest and most successful fintech in France like 10 years ago. And it's now the first digital bank with over 1 million clients in the French market. I partnered with Salah. Salah was the former head of the 35 engineers team that developed the online banking platform for Boursorama. And Anthony was named the best young broker in the French market by the French Broker Association. So we are rather experienced with a good combination of skills. What did we achieve since our launch mid-2015? We have launched partnerships to develop our access to market since the middle of 2016. And today we have 6,000 professional clients. We have over 12,000 policies, and we are growing extremely fast because we have signed now 10 distribution partnerships. We have raised 1.7 million euros since we launched the company. And now we are going for a big round of financing because we can't cope with all the potential business development that we are facing, as now all the big corporate players in the French market want to partner with us to develop the smaller end of the segment. So if you want to work with us or partner with us, I'm going to be around and happy to meet you. Thank you.
So, for anyone who saw the title of my talk, maybe it was bigged up a little bit about this epic fight between crowdfunding and venture capital and angels, and it definitely is not. Apologies to those who saw the movie Batman vs. Superman. The comic was amazing. The movie was Ben Affleck, and, well, that says enough. Who is fundraising in the room or looking to fundraise soon? Just audience participation? Anybody? It's not still early. A couple of you. Okay, everyone else, you can get your phones out. That's all right. One of the things that you'll find when you do have to fundraise is that it's quite a complicated task to navigate, and there's many routes that you can go down. You've got crowdfunding, you've got angels, you've got VC, you've got private equity, you've got debt side of things, peer-to-peer platforms that do loans to businesses, you've got banks, you've got you name it, you've got lots and lots of options, and trying to navigate that and figure out what is right for you is often quite difficult. Make the wrong move early on, and it could set you up for failure later. And I'm not exaggerating that. We'll come back to it. Interestingly, though, over the past couple of years, people started to, people always think that crowdfunding is quite a small player in the industry, but actually, globally, if you look at it, crowdfunding has surpassed angel investment, and it was predicted that last year it would surpass venture capital investment. We're talking about over 30 billion pounds being invested into companies through all the different forms of crowdfunding, including rewards, donation, debt, and equity. So it's not just this tiny player, and it's not just your friend saying, hey, I'm trying to get £1,000 for this game that I'm building. It's quite a serious part of the investment ecosystem. And here in the UK, even more so, crowdfunding, equity-based crowdfunding has actually surpassed pure venture capital, so VC investment. Not the total early stage investment, which includes things like EIS funds, high net worths, and private individuals who do direct investments, but from the perspective of platforms versus your typical and traditional VCs in the UK, equity-based crowdfunding puts more money into early stage businesses, which is quite impressive actually, considering that the first crowdfunding platform, equity-based crowdfunding platform, launched in 2011. Looking at venture capital, there's many more pros and cons than what I'm going to take you through, but the real things to pay attention to are that VCs can write big checks. They have business expertise, they have connections, and this is their job. When you go and pitch to a VC, they can write anything from £100,000 to 20 million. And what they do when they invest in you is they want to see you succeed, very much so, because their responsibility is to return to their underlying LPs and investors. So they'll open the door for you to go and meet with mentors, to meet with people from the industry. They'll help you recruit in some cases. They'll do everything that they can to make sure you're a success, and they'll push you very, very hard. The cons being there's always strings attached to VCs. There's often things like performance-related, additional shares if you don't hit KPIs. There's fees from some VCs, which are terrible. I'm terrible at grammar, but your job, not you, our jobs, could be at risk. The VC has to make sure that you are doing the most that you can to return money to their underlying LPs, and if it means removing you as the CEO and the co-founder, that will happen, and it does happen. So there's a bit of a scary side to the VCs. On the crowdfunding side, there we go. The biggest pros that crowdfunding has in its favor is that you can take your customers and allow them to invest in you and allow them to become advocates for the brand. And what I mean by that, if you give someone who's using your service a chance to invest in you, and they do, they're much more likely to go out there and find other people who might use your service. They're going to talk about your service more than they would, say, Coca-Cola. So when you've invested in Coca-Cola, you don't go around telling everyone, hey, I drink Coca-Cola, you want to buy one. But if you have a startup that you've invested in, you're more inclined to say, hey, look, I found this interesting insurtech, fintech business, you might want to check them out. You also get quite a bit of PR and marketing out of raises if you do it right. I know the gentleman's going to talk about PR and marketing later on, and maybe not specifically for crowdfunding, but every week, every day, there's a pitch in the paper, whether it's local, regional, or national, about someone raising finance through a platform. And you can definitely take advantage of that. The cons, well, there are fees associated with all crowdfunding platforms, from rewards to equity. They range from anywhere from 4% up to 10% on the high side, so it can be quite expensive. It's a lot of work to go out there to put your name in front of everybody and say, hey, look, I'm raising cash, to call everyone that's in your address book, to ping everyone that you've ever connected to on LinkedIn or Facebook or whatever it is that you do. And it's a month to 6 weeks of just, what do you call it, hustling is probably the nice way of putting it. I call it just, sacrificing all your social life and family life to try and get funding, but it's a different thing. There's also a low guarantee associated with crowdfunding. So most platforms have about a 25% success rate in terms of if you go and you list your fundraise on a platform, 1 out of 4 fund, the rest don't hit their target. So if you don't hit your target, obviously you've put in 6 weeks, 8 weeks, 10 weeks, whatever it is, trying to fundraise, it fails, you don't get any of the money, and it can be quite stressful. The big thing, though, is asking if they can play together. And at the start, crowdfunding platforms were seen as kind of like the last place that you would go if you couldn't get money from VCs or angels or friends and family. You'd go to a crowdfunding platform. But things have changed. Crowdfunding is often considered the first place that people will go for certain types of raises. Typically, your crowdfunding round is about 100,000 up to about 1 million. Any more than that is a real struggle, although there have been a few raises that have been 2 million, 3 million, 5 million. Most are between 1 and 1 million. So it's only good for, say, your seed round and then your growth round. But when you get anything over 2 million, you probably want to go and talk to VCs. I'm just wrapping this up, sorry. On the platforms as well, if you look at our platform in particular, there are a lot of angel investors. The average ticket size that people are investing is about £7,000. So it's not just 10 quid here and 50 quid there. It's real serious angel investors who have made the switch to investing online because they get a wider exposure to different deal flow. So the fundraising environment is changing. Crowdfunding is coming in and kind of taking away that first and second round. And my colleague Ollie is going to be here at 1 o'clock if anyone wants to chat one-on-one with him about doing a crowdfunding round. So I was going to talk about ICOs. We'll skip it. It's not regulated. I've hit 10 minutes, and we can talk about it later. So thank you. No. It's my fault. Cheers.
I'm going to talk a bit about branding in the 21st century in the insurance world. As you can see, I haven't adopted the dress code for today's event. I'm a consultant and I advise people, so I wear a suit and tie. It's part of my brand. A brief commercial. My business has been going for about 30 years. We help corporates get their message to their various audiences. We use multiple delivery mechanisms. We're a multifaceted corporate communications consultancy, producing public relations, marketing, design, advertising, and of course social media campaigns on behalf of our financial services sector clients. In the old days, we printed corporate brochures or product leaflets, and press releases were produced on typewriters. Some of you probably don't know what a typewriter is. Today, we build websites instead of brochures and trade on them. Press releases are distributed on Facebook, LinkedIn, Twitter, and every other channel that you can imagine. Most people don't read newspapers in the conventional sense. They get their news through various channels. The media landscape has changed out of all recognition, and the common denominator is the web. So what makes a strong brand? It must be distinctive and have personality and reflect corporate values and identity. It's all very well having a great company and great products, but unless you have a strong brand, you won't get your message across to your marketplace. Corporates must have personality embodied in their brand, and a strong brand builds trust and loyalty in both the corporate and ultimately its products and services. Companies rated as the stars of the future will be those with clearly positioned, confident corporate brands. This confidence will spread to their products or service offerings and then add value to your entity. Insurance brands have historically been very conservative. Financial institutions just love blue. It's a safe color. It's a safe place to invest, to manage your pension or insure your house. But that mold began to break about 20 years ago, and now we see many shapes and colors in use. There's a difference between B2B and B2C brands. B2C must appeal to the consumer rather than the corporate. And B2C brands tend to be more creative because they must differentiate themselves in what's a very crowded marketplace. So let's have a look at some well-known and perhaps less well-known brands. Looking at this slide, which brands stand out and which don't? It's quite extraordinary. You look at something like Allianz and you think, well, that's probably been there since Luther was a boy. Moving on to the more interesting and the disruptive type of brands, this is when it gets fun. But do they get their message across? Do you actually understand what these businesses are doing? So we've seen conventional, we've seen modern, and now we see the downright dreadful. It is unbelievable that somebody is still trying to sell insurance using pretty girls, and Abbeygate should be shot. I hope there's nobody here from Abbeygate, that's all I can say. There are people here from Amlin in the second row, a couple of friends of mine. And I'm now going to tell you a bit about the joining together of their logo. Amlin's brand was bold and straightforward, and when they put them together, they didn't change them. I think this was a huge missed opportunity. Unlike two big corporates who got together last year, XL and Catlin. They ended up with a brand which works. It looks cohesive, unlike the former. Sorry, excuse me. So not very long ago, our design team were tasked with creating a new identity for an old-fashioned Lloyd's broker called, believe it or not, Cooper Gay, Sweat and Crawford. Great name. They themselves had managed to change their identity to CGSC, which is highly original. But with a new chief executive who had a tremendous vision, we were tasked with a new brief. We had to come up with a visual expression of what the business was going to become, something striking, something provocative, a break with the past, an identity that would instantly separate this business from its peers. So how do we do it? Well, we involved the team, the team at what was then called CGSC. A lot of talking, lots of working parties, and then we drew up a short list of names. Once the name was chosen, this small team directed the brand design process, and this was the result. We think this is pretty revolutionary. The name's distinctive, the logo's bold, it's straightforward, and it's got a unique logo type. That's the lettering, for those who don't know what a logo type is. The dot is important, and red, a disruptive color. The rebrand got huge media interest. Now, if anybody's got a young brand and wants to build, the media is still incredibly important in getting your message across. Furthermore, we've taken that logo and we have adapted it, everything from cars to M&Ms, all the usual paraphernalia, but also interior design. We've won awards for the campaign, and we're proud of our work. So finally, what's next for the insurance market? FinTech affected financial services, InsurTech, or surely it should be InsTech, is affecting the world of insurance. Delivery mechanisms are developing, disruptive technologies will bring competitive advantage, but none of the disruptors will achieve their goals without powerful branding. And I'll leave you with one final thought. Does Ed wear a tie? Thanks.